looks like a bullish read on inventories. They were down almost 3.5 million barrels in the latest week in the United States. Let's bring in Bob Yawger, Director of the Energy Division at Mizuho Securities. Bob, it's always great to see you. Thanks for joining us.
Thank you.
If we put up an intraday for oil, we've seen selling this morning after an earlier rise in crude. What would be pushing oil down?
Well, Andrew, that situation in the equities with Target and Walmart yesterday, you can look at that as a demand indicator. I mean, we're getting sucked into the equities downward spiral here a little bit. Demand indicator as a function of those two big disappointments is putting pressure on the energy complex here. I mean, they're down by double-digit numbers. Target was down over 20% pre-market this morning. So that's seen as a certain degree of a demand indicator. And it's really hard to believe that we can still operate in the red after that storage report. That was very bullish.
The storage report from the Energy Information Administration.
Yes, gasoline down 5 million just a week before Memorial Day weekend. We're operating at low levels, and we're flirting with demand and supply dynamics that are going to put us at $5. Yesterday, for the first time, every state in the United States was above $4 a gallon at the pump. 5 states were at $5 plus, and California was at $6 plus. And storage continues to slide. Demand was up in this report. Demand continues to go higher, despite the fact that you have prices at the pump at elevated levels.
It's fascinating. I mean, we're looking at the gasoline futures in the United States up almost 80% in the past year, and in California they're paying north of $6 a gallon.
Yeah, it's incredible. Just think what the next CPI inflation data is going to be. We've really ripped this month. We were actually dipped below $4 for a little while there. And now I'm seeing mid 450, 460, 470 levels in New Jersey. And we're usually pretty low levels. We have enough refineries to put a lot of gasoline in the market. And we're getting close to $5. It's just going to continue. That will put pressure on every other financial instrument. And, all the moving pieces did not add up to a positive situation. Hence, you had Fed Chair Powell yesterday double banging on that warning signal yesterday, which kind of riled things up here a little bit.
So I'm looking at the Bloomberg analysis here of these latest inventory numbers. You guys in America have been bringing in a lot of crude. Apparently, crude imports hitting 6.6 million barrels a day, the most since the winter, mid-February. And most of that increase came from your Canadian friends. Shipments from this country were 3.6 million barrels, most of the imports.
Yes, it makes sense. But the real dynamic there is the Brent WTI ARB. WTI, the U.S. grade, is only $1.80 cheaper than international grades this morning. That means nobody's coming to the United States to buy U.S. crude oil because it's the same price as it is every place else. You get killed on cost of carry. You get killed on transportation and storage. But on the other hand, for U.S. importers, U.S. refiners, they'll import cheap barrels from every place else. You can see the discount on Canadian grades. They're relatively cheap. We'll take all those barrels we can stuff in the pipe.
I was curious. So we're looking at the spread there, super narrow, you say, between WTI and Brent. What is that? Is that bad for refining margins? I'm trying to remember.
No, it's pretty good because they can buy the crude oil cheap. They buy relatively cheap feedstock.
Okay.
And then sell it at basically market price. So they actually do quite well. And refiners, they're not quite doing as well as the producers who, it's just a ripper market for them. But the refiners in this country have been doing very well. Valero is one of the top names of the year. So, it's been a good year for the refiners.
Maybe we'll have a look at, so we're looking at the discount now on our crude. Any particular reason why our crude, its discount has widened out a bit, the Western Canadian heavy oil, about $14.40, not a huge gap, but is that simply because of the premium or the price WTI has gone to, do you think?
Yeah, it works on both sides. You could go weaker and we could go stronger or vice versa. We could weaken faster. There's basically 4 different dynamics there. But yes, yeah, WTI has actually been pretty strong here because storage has been actually pretty close to multi-year lows.
Hmm.
So yeah, it's going into summer driving season. We're in a dicey situation here. The refiners are basically they're doing well. The crack, the relative price of gasoline to crude oil is at like 50 bid at $60. The all-time record is $60, and that was posted up when crude oil prices traded negative territory. So we're at levels that only were at this level when crude oil printed to negative territory, but gasoline was still in positive territory. $60 a barrel a refiner makes off of gasoline right now when you're comparing a barrel of gasoline to a barrel of crude oil. On the market, it's gallons versus barrels, so that's apples to oranges. You make it apples to apples, you're making $60 a barrel of
Whoa.
gasoline almost.
Nice. Now, you said we're in a dodgy situation or a dicey situation because your fuel consumption apparently in the States, both gasoline and distillates, has not dropped. There's been drivers are still merrily putting, what is it, pedal to the metal. So could gasoline and distillates run even shorter, get into even tighter supply?
I'm guessing they will. I mean, in 10 days, you're going to have from New York City to the Jersey Shore for 60, 70 miles. It's going to be 6 lanes wide parking lot. Nobody for hours. People just burning gasoline like there's no tomorrow. It'll be like that into July at least. Every weekend, on the way down to the shore and all the way back home. And it's not going to help the demand. It's not going to help the situation at all. We are drawing down on gasoline storage at the worst possible time of year. And we were down 5 million barrels today in storage. That's not good.
I know you live in New Jersey, Bob. Do you live near the beaches? Are you plagued by the heavy traffic?
I live by the beach, but I live on the other side of the highway, the 6-laner. I live to the beach side, so I don't have to drive through traffic to get there.
But you do see hordes of people showing up.
You cannot go out to the New Jersey Turnpike. You cannot go out to the New Jersey Parkway from about 7 o'clock in the morning till 1 o'clock in the afternoon on the weekend. It's just a parking lot. Literally a parking lot. It doesn't move.
Okay, Bob, thank you very much indeed. Bob Yawger, the one and only. He is director of the energy division at Mizuho Securities.